Welcome back to Academic Market Insights. Today, we have a special treat for you. I am weirdly giddy because it's that exciting. We are going to be talking about convertible bonds. So, convertible bonds are super, super awesome products because they combine equities, fixed income, and a little bit of optionality. Okay, a
Our
lot of
favorite.
optionality.
Yeah.
And so I'm excited about it. Dr. Rowe is going to treat us today of a discussion on convertibles specifically for Tesla. So it's pretty unique. It's pretty exciting. I can't wait to get into it. If you like this video, please hit like. And if you haven't already, please subscribe.
Yeah. So there. As Dr. Demiak just said, we're going to talk about we're going to introduce convertible securities at a very high level, and then just talk about why Tesla back in the I don't know what we call the 2010s. It's like the 20s, the 30s. What do we call it? Do we call them the tens?
The aughts or the
The aught?
teens?
No, that's the OOs.
Oh, that's the
So
aughts.
like 2001 or whatever. Oh well. So the decade between 2010 and 2019, I think that's the right. Um, Tesla did issue a few convertibles. Now, last decade, Tesla was it really was a prime candidate for convertible issuance. So I'm going to talk about their specific one after really explaining what convertibles are. And then we're going to quickly run through what the outcomes were for people who bought the convertible on the deal and held it through, or just what the performance was of each convertible bond. And all of them were converted into Tesla shares relative to just buying Tesla shares outright. So that's going to be the progression that we go through over the next 15, 20 minutes or so. And when I was doing research on the Tesla convertible, that's what I got. Like
And
five
Dr.
of
Rowe, what
those.
is it?
That is, and I don't know where that thing is now, but they just for a payload test, SpaceX took one of Elon Musk's old convertible Teslas. They used to have the little Tesla Roadster that I don't think caught on very well. And so and the reason I say that is I don't think they make them anymore. But he had a convertible Tesla, strapped it on top of a rocket, and sent it out into space. And it's outside of our orbit, and I've forgotten I think it's heading away from the sun.
Wow.
That's probably the safer direction to go if you're up there.
Yes, I would imagine
Yeah.
so. Mhm.
But yeah, when I Googled Tesla convertible just to get the filings, etc., that's what I got. The spaceman. So, convertible. It really is a combination of fixed income security. You might not say these were fixed income securities because some of these Tesla convertibles had very, very low yields. They can be preferred shares. We you can't go through any discussion without mentioning Warren Buffett, and we will probably do something on convertible preferreds with Warren Buffett because I've done some work in that space in the past. But Mr. Buffett likes preferred shares because they give you dividends before the common shares get their dividends. They're a little bit safer than common shares. And often, when he's been called on, like Goldman Sachs back in 2008, to help recapitalize a firm, he has taken preferred shares that are convertible into common shares that have a really nice, really nice yield, like 9 or 10%. It's just kind of ridiculous. But the convertible securities that we're going to talk about, they do pay a little bit of interest. And this was the attraction for a lot of folks that bought this was the conversion into shares of Tesla.
Hmm.
Tesla, if you don't believe Tesla is not a cult stock, even with some of the politics stuff's going on, go on Twitter, say something bad about Tesla, and see what sort of response you get. It just it's there really are some people that are diehard Tesla believers, which is great because they continue to progress as a company. Now, Tesla was doing this because they needed more capital to produce more cars to keep up with the demand. which is a perfectly justifiable reason to issue a convertible security. Now,
Mhm.
normally companies would like to issue bonds, but Tesla really had not reached the point of profitability where they could have issued bonds without a very high yield. So, to kind of borrow money, they chose to issue convertible securities. And because Tesla's kind of a cult stock, people bought into it based on the anticipated upside in the stock more than the yield. Now, again, this is a high potential long-term growth with short-term capital needs. They issued five different convertibles between 2013 and 2019, and they raised a total of 5.77 billion. You can say, and I put borrow in quotes because they ended up having to give out shares at a pretty low cost basis to the people that got the shares and dilute themselves. So there were some negatives in the equity space, but they were able to borrow at a very low rate over the short period of time that the convertibles were out there, paying even below the short-term risk-free rate on some of these, which is just amazing.
Well, and it's just amazing that they were so popular and they were bought at
Well,
such a
people, yeah, and people were nuts about Tesla as a cult stock back in the day. And I really do think that was part of what helped with the demand of the convertible securities as well. So here's the ones that were issued and what the maturity dates were on each of them. Do note there was one that just matured about a year and a half ago. We sit here in late August of 2025, so a little under a year and a half ago, that last one. But you can see they were issued in 2013. Two of them were issued in 2014 together. I'll talk about that one, those as we talk about the individual ones in a minute and what the big difference is between the two. They one of them has a shorter time frame than the other one. That's the main difference. The one in 2017, interest rates were starting to go up, so they did have to pay 2 3/8% on those. They did allow, but do note that the conversion premium on those was 25% versus the conversion premium up here of 42.5 and 35%. So I think people did want and the higher the conversion premium, the more upside you need out of the equities for the convertible to be converted into shares. So the lower the conversion premium, basically the closer to at the money the call option that allows you to buy the shares is. Yes, Dr. A.
Could you explain a little bit about what the conversion premium really is? So when you
Yes.
say it's an upside of 42.5%, what is that in reference to?
It's in reference to where the stock was when the convertible was issued. So, for instance, because we use the 42 and a half, this, the February 27th of 2014 that matured in 2021 with the 1.25% coupon,
Hmm.
you could convert this into 13.894 shares of Tesla, which if you divide 13.894 into $1,000, which is the par value of the bond,
Okay.
that is a conversion price of 71.97.
Ah,
The stock was trading at $50.51 on the day that they priced the convertible. So to reach that conversion price, the stock had to go up by 42.5%.
got it.
When things were a little bit more touch and go and they had to pay a higher interest rate, their conversion premium was actually lower as well. And only had to have 25% upside in this to hit. I like to say it's break even relative to the convertible price. And this 2065, I know that looks like a really low price for Tesla. That is based on a couple of splits. We
Okay.
had to split it because the stock has split. They split once for the 2022s, it split twice for the 2024 convertible, and that's why those prices look so low relative to the higher ones as well. And they issued $660 million of that first bond in anywhere between 900 and $2 billion, 900 million and $2 billion of those other four. Now, what I did was, and I think this is good for information purposes, I pulled the Bloomberg page for each of the convertibles. And I just wanted to, because I know a lot of university students have access to Bloomberg. And if you type in a ticker and you hit the corp button instead of the equity button, you'll get a list of the bonds outstanding. In this case, get a list of the convertibles that and the bonds that have matured. So, got a list of the five convertibles that had matured. Here's where we get the conversion ratio from, the coupon rate, this 35% premium, which I showed on the table. I double checked it with the conversion price and the stock prices just to make sure everything was correct. Now, the green shoe
Hmm.
is and I'm not going to ask Dr. Ademiak where that comes from because we discussed it and she didn't know off the top of her head, and we still didn't discuss it since. But there was a shoe company that issued shares back in the 60s, and they had an agreement where if there was a lot of demand for their shares, the broker could sell 10% more. So the green shoe is and in this case, the original deal was $600 million. But if they had so much demand that they could sell more, they actually had the alternative to sell $60 million more. So there were 660 million issued in this one. And that's always in the footnotes down here. I did see somebody that was talking about the Tesla convertibles, and they didn't include the green shoe in the amount that was put out there.
Hmm.
But the green shoe was the over allotment was taken in all five cases, which again is not totally surprising because Tesla has that cult following that people really like. And what I did for each of the convertibles was I took a look at $1,000 in the stock on issue date versus $1,000 in the convertible. And if you had bought the shares outright, you would have made $2,189. It would have risen to $3,189. The convertible, you only would have made $2,285. But keep in mind that if the stock price had gone down and the convertible matured, you would have received you would it you wouldn't have converted the bond. You would have received the par value instead.
Mm.
So even though we're going to have underperformance for the convertible versus the shares in every case, think about it like owning the shares and kind of having a put option on the shares
Sure.
because with the worst case scenario.
And that's
Uh,
very attractive to investors.
mhm. So the second one, yeah. Oh, and also one thing I did want to point out was this 330.56. That was the stock price on the day that I pulled these pages. If I probably should have blacked it out, because just for lack of confusion purposes, I should have blacked that out. But these were issued. This is the first one that was issued in 2014. And this was the one that matured in 2019. Now, they issued two different convertibles on this date. And in this one, again, the original deal was $800 million, and they had a green shoe of $120 million. But this was convertible into 50% cash and 50% stock. I know. And wasn't paying attention at the time, not really sure why they chose to do that. But then they also have a much lower coupon. And you can think of the put option on this guy being fairly tight because you're already converting to 50% cash.
And
And this one, yep, go
well,
ahead.
I was gonna say, and it's interesting think about converting also to cash as opposed to the equity. In corporate finance, we always teach that debt or cash is so much less expensive than the equity itself. So it's an
Yeah,
interesting security.
yeah, no, absolutely. The impact of cost of capital on firms when and I think this is one of the weaknesses that I talk about toward the end, or one of the concerns around convertibles, is that companies don't really have, a lot of capital. They 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 don't really have, a good handle on what their financing costs are if they don't, if they don't know if people are going to convert their convertibles into shares or into cash,
Mm.
which is the case right here. Nice leading question. I appreciate it. The one that matured in 2019, that convertible value of $996, that's based on where the share price was and only converting 50% of it into shares and then getting $500 for the other part of it. And it's convertible, the convertible value upon, at 3/1 2019 was $996, which
Mm.
I think some people probably took the shares and maybe some people took the cash. And if you had put $1,000, if you put $500 in cash and the other $500 in shares, you would have had $1,102. I even adjusted this $1,000. It's really $1,000 in stock plus cash.
Nice.
So a little bit tighter range in there.
Right.
A couple of the last ones, there's just a ridiculous difference between the two. This is the other one that was converted, or I'm sorry, that was issued at the end of February 2014. And this one, the big green shoe, 180 million, issued. The original issue was 1.2 billion, and then they got to tag another 180 million on there. Um, this one had a little bit higher coupon, and the net result on this guy, oh my goodness. Do note that before it matured around here, where I'm doing with the red, the other one that was issued in February of 2014, this one took off. And you can even see that the stock's price when conversion occurred, and conversion actually occurred early on this one. When a conversion occurred, stock, $1,000 in the stock would have grown to 16,207. The convertible security was at $10,802. I do not include the interest on this,
Mm.
but this is 7 years of $12.50 interest. So we're not really, we're talking about what, $87.50?
Yeah.
We're not talking about a whole lot here. So,
No, it's not going to
uh,
be a material enough move.
no, not at all. So, and then these last two just took off like, well, the shares took off like crazy as well. But we've got this one convertible to 15.26 shares with the price at 65 and a half. This was really right before the stock took off. Higher coupon, interest rates had started going up. I think that contributed to it as well. You also have to keep in mind that they did have some other convertibles outstanding at this time. And as you start to borrow more, people are going to consider you a higher risk and want better compensation for that. So you have a higher coupon and you also have a pretty tight conversion premium. So even though, the company was starting to do fairly well, the fact that they were borrowing more and they still had loans outstanding, I think contributed to that, and the macro environment contributed to what you see as a very, very tight conversion premium and a higher coupon than the other four convertibles that we're looking at. Again, they started out issuing 850 million and they got to add 127.5 million more. The interesting part of this green shoe is this is the only one that has a date that's after the original issuance. So again, I do wonder if they had a little bit more difficult time pricing this one or placing this one with institutional investors than the other ones.
Got it.
He still did really well with it, but
It very well.
I still, this is the only one that the green shoe was exercised a couple of weeks later, where somebody said, "Hey, I want to buy some of that,"
Well, and
and
they were still filled. It was still
oh yeah,
filled.
yeah, they were still able to get it. Yep. So the convertible, $21,300 on this, and that's a really nice 4-year return. The stock, $1,000 in the stock, took you up to 23,366. That one was priced. I just want to make sure that I'm pointing at the right spot. Yeah, it's kind of hard to see, but this one was priced, well, I'm right around in here when the stock was at did not do a whole lot and then took off to the upside. Actually, what I wanted to show was here. You can see in 2017 here, a lot of flatness for a couple of years, and then things take off to the upside. That's the previous chart. But they really were in a period where the stock had just been stuck in a rut for some time, and they were borrowing more money. So I think they had to pay a higher rate and have a pretty tight conversion premium. And then the last one, a little bit wider conversion premium, a little bit lower coupon rate. The shares were converted at $20.65. This is split adjusted, so don't get too like why is the conversion price so much lower on this one than the other ones? They issued a total of 1.84 billion, and were able to get this done fairly well. And they did have to wait one extra day for the green shoe to be fully effective. But still, and on this one, you look at how things are priced, you look at how things worked out. The fact that they were able to place the biggest one as the last one, and they also placed this one after some had matured, and people had done fairly well with them. I think maybe they also were given a nod and a wink and saying, I think this is the last time we're going to have to issue a convertible. We're going to do a
Sure.
big one, and this is going to be the last one.
Right.
And I think that increased the confidence in it. And like the other ones, this one did particularly well. The convertible, 18.4, and the stock, $19,900.
Whew. Did
I know,
very,
nice
very well.
returns. Now you brought one of these up in a roundabout way. The equity holders will be diluted when the shares are issued to cover the conversion. And that can result in a reduction in earnings per share. And this is why shareholders generally don't like when companies do secondaries. This is actually that equity dilution is
Hmm.
why a firm would rather put out a convertible security where they're not instantly diluting the equity.
Right.
And if the convertible gets converted into shares, it is done so based on success of the company. So the equity dilution only occurs if things are going well. It's not a great sell, but it's an easier sell to the equity holders if you do a convertible than issuing shares.
Oh, absolutely. Because equity dilution is real.
Yeah. They're uncertain. The ultimate cost of capital is not known. Don't really know if it's going to be converted into shares or not. Don't know when it's going to be converted into shares. It's very possible that it can be converted early. And if it's converted early, you go from some debt outstanding to some equity outstanding. And I'm not a fan of market signaling. This always shows up in the textbooks, and I honestly included it to talk bad about it. But I don't think issuing the convertibles in this case was taken as the company believing the equity was overpriced. They had a use for it. And that's what you want to ask when a company is selling securities. What are you going to do with that money? Ford issued $1 billion in bonds about 3 years ago just to build a factory to make the electric F-150s. That is a good use of funds.
Hmm.
You know, if so, you want to know what the firm is using that money for. If a company's issuing shares and you find out it's just management selling their holding, yeah, that's bad
Doesn't
market
feel
signaling.
that doesn't feel good.
But don't take that market signaling at face value. I do believe that the market is smart enough to figure out, that we're not blankly taking the signal. We're asking what's the use, and if they don't have a good excuse, they don't have a good reason for it, well, then heck yeah, we think
We're not
that
interested.
they're
Right.
issuing it just to take advantage of the stock price and nothing else. So with that, we got through talking about the Tesla's history with convertibles. They don't have any outstanding right now. I would guess if they do have to raise money in the future, they will do so for the first time in the regular bond market. I think they're established enough for that at this point.
Hmm.
Um, Here's how to get hold of us, see what we're doing, etc. The website's a work in progress, but we've got some white papers that we're going to slap up there as soon as The
Yep.
person that's in charge of that gets it done. You're at the YouTube link. We appreciate you being here. And as always, subscribe and hit like. If you'd like to email us, if you've got any suggestions, I deeply apologize to somebody that sent an email back in late July about the VIX 220 D put spread. I apologize to you. I did respond to your email today, and you did have some really good thoughts around that one. I will start checking that email more than once a month. So I do. We will be using that. In fact, I'm getting ready to set it up just to forward to both myself and Dr. A, who people really would rather talk to. And then on Twitter, if we're up to anything, put anything out of interest, we tweet it at ACA MKT Insights. If you own Academic Market Insights, I will give you $100 for that Twitter login because
That's
I don't
more
like saying
valuable
ACA
than the
MKT Insights.
convertible.
Yep. So there. All right. Well, with that, thanks for spending a few minutes with us on this topic. We, are open to other ideas. Feel free in the comments or via email. I promise I'll check it to give us ideas of things to talk about. There are a couple in the can right now that will be coming out that are direct responses to your questions. With that, again, thanks a lot for watching.